It's about that time of day again. My name is Joseph. Monday evening, June 25th. Welcome back to your nightly newsletter. My job is to help new traders earn consistent profits using a simple and reliable trading strategy. And my plan this evening is to identify the most reliable trading opportunities, setting up for tomorrow's trading session. And tonight, I'm covering crude oil, S&P, Nasdaq, gold, and euro. Starting off this evening, crude oil is bearish, but we're sitting at the low of a long-term spike in range pattern. So I'm looking for the sellers to fail so I can get into buying opportunities going back up to retest the highs tomorrow morning. The S&P is also bearish with a spike in range pattern of its own. And that tells me to look for selling opportunities using traps while keeping my eyes open for a potential reversal and a hidden channel buying opportunity tomorrow morning. Nasdaq is bearish and bouncing off major support this evening, so I'm watching for a 1-2-3 reversal pattern for buying opportunities with a short covering rally tomorrow morning. Gold is range bound with a quiet session. Get a triangle pattern tonight on the gold, and with the overall bear trend in place, my plan is to look for selling opportunities using the 2-try rule above the highs of that range tomorrow morning. And of course, wrapping up on the euro tonight, euro is bullish with a spike in channel pattern, and my plan is to look for buying opportunities down near the low of that channel tomorrow morning. Well, we're back in the action once again this evening. Great to be back here with you guys. Hope you all had a great weekend. This time, we're counting down to the end of the month, which means we're expecting big volatility, and from what it looks like from today's session, big trading opportunities as we squeeze out the last few drops of what has been a great month of June. And as always, I've got a great newsletter in store for you guys and gals. We got some big news and some big opportunities coming this week. I'm going to put the plan together in just a few moments. Before I jump into charts and put the plan together for Tuesday's session, I do want to remind you, if you're watching me this evening on YouTube, you can find a detailed description of this entire trading strategy written out in text here on my blog at sidewaysmarkets.com. I'll leave all the links, the description of this YouTube video. Also, if you have any questions about anything covered in tonight's video, please remember you can post those questions in the comment section below. And if you like what you see, please help support this channel by subscribing and make sure you hit the bell icon so you're notified every time I post another video. And if you really want to stay in tune with everything we do here at School of Trade, head over here to Sideways Markets. This is our trading blog where all the action happens every day, and make sure you join our mailing list. That's right, in the upper left-hand corner, all I need is your name and your email address, and I'll send you an email every time I publish something new. Oh, and don't forget, in the lower left-hand corner, you can follow me on social. I'm always posting charts, links, videos, quotes, all kinds of great content that you won't find anywhere else if you're on social media throughout the day. Follow me on social, lower left-hand corner. And how about those charts from tonight's video? How easy is this? All the charts from tonight's video, that's right, have them ready on your computer for tomorrow. Grab those charts here on my blog and be ready for tomorrow's session. And speaking of tomorrow's session, would you like to learn more about this trading strategy? If you'd like a deeper dive into this trading strategy, I've got a free pass. Come out and join me tomorrow as a guest in the trade room. If you're not a member here at School of Trade, grab that free pass in the upper right-hand corner. And don't forget, if you got any questions, you can post those questions in the comment section below the video or hit me up on live support on the right-hand side of our website. We are looking good. Hope you guys, again, had a great weekend out there. Man, what a beautiful weekend it was here in Los Angeles. Hope you guys had some fun with family and friends. We're back in the action, though. Like I said earlier, we're squeezing out the last few drops of the month of June. We, of course, have, right, quite the month here so far, right? 1, 2, 3. This will be 4, a little bit more than 4 plus 1 weeks here, right, of this month of June. It seems to have been in June forever now. The 29th is the end of the month, and so anytime we start seeing the end of the month, there are two things we start thinking about. 1, increased volatility, and 2, those prior month open, high, low, close levels. So as we start seeing the end of the month on our radar here, now that we can see the end of the month in front of us, we expect to see an increase of volatility as traders try to make up for lost time, kind of equivalent to kind of cramming for an exam the night before the test date. You know, at the end of the month, traders kind of try to catch up on missed opportunities, try to hit their number for the month or dig themselves out of a hole for the month as well. So we do expect to see bigger volatility as we go into this week. We also know those prior month, right? So the month of May, prior month, open, high, low, and close levels are going to start becoming magnets, start acting as targets. We'll get a bunch of those here tonight. We'll talk about on tonight's newsletter. So end of the month, increased volatility, prior month open, high, low, close levels. Definitely looking forward to, right, a volatile rest of the week. At the same time, too, we also have another EU summit, right? I thought we just had one, but apparently they're doing another one here. We get another EU summit this time in Brussels. I'm not sure what that will entail here for us. Gold's been pretty sloppy ahead of that EU summit this week. I would expect as we get closer to the end of the week, I would expect to see more chatter, more gossip, right? More news headlines regarding that summit. As of right now, I don't have a lot to share with you guys about the summit right now. I just found out it was scheduled for Thursday and Friday in Brussels. I know we just had that ECB summit, right? Just a few weeks ago, and apparently now this is the EU summit, right? Not really sure what the difference is on this, different location, different headline, but again, we'll know more about that as we go into the end of the week. I don't expect that to have too much of an impact tomorrow, right? But as we go into the end of the week, increased volatility, right? Open, high, low, close levels from last month. And of course, that's pretty much it. That's pretty much it as far as the big picture goes. Tomorrow, of course, is Tuesday, June 26th. What do we got here for tomorrow? Nothing. No major news tomorrow morning. All we really have here is some minor news reports. We got case-shiller home prices. We got consumer confidence tomorrow at 10 o'clock. I really don't pay much attention to those green news numbers, right? I spend most of my time focused on the Red Star news numbers, which we have plenty of them this week, except just nothing tomorrow. So really our focus tomorrow is probably going to be a possible short covering rally. We saw that bloodbath today on the E-minis that was all coming on the back of a rumor that there was going to be some sort of law between U.S. and China, between investment into their companies, right? It turns out that was just a rumor, was not the truth. Surprise, right? The news media does not give us anything true here these days. So possibly an unraveling of that with a short covering rally tomorrow. We'll take a look at that tomorrow. And we're still kind of waiting to see how the market's going to react out of that OPEC meeting that we saw on Friday, right? Last Friday had that OPEC meeting, and just a classic example of why we don't trust the news. Last Friday we hear from OPEC. OPEC says they're going to increase production, and forget about what you learned in school, kids, about supply and demand. Price on oil rockets higher, right? How does that work? But the bottom line, though, is we should be seeing some continued response to that OPEC meeting here this week on oil. So oil responding to OPEC, E-minis responding to the completely blatant rumors and lies coming out of the news media this morning. So this should be a pretty active day tomorrow. Bottom line is I don't think we have anything to worry about as far as getting some activity tomorrow. No major news, but we got a lot going on right now. End of the month, OPEC reaction, China, U.S., regulations reaction tomorrow. So again, don't expect this to be any shortage of opportunities tomorrow, even though we don't have a lot of major news on the calendar. As always, tomorrow morning, 8 o'clock Eastern time. That's where you can find me tomorrow morning in our trade room, kicking some butt with all of our clients here tomorrow morning, 8 o'clock Eastern time. So be there with me. All right, let's jump right in. What are we looking at here tonight? We got crude oil, S&P, Nasdaq, gold, and of course, euro, right? We're tonight on the euro. Start off tonight on crude oil. Crude is bearish, but trading at the low of a spike in range, coming off last Friday's monster OPEC-fueled rally. The overall momentum of this market is clearly bullish, but we can see the bears have taken control of the short-term trend with a clear 1, 2, 3 reversal pattern. I want to buy for a long run back to that highs, right? But the only way I can do that is after seeing the sellers fail and turn into strength going higher. On the sell side, I don't want to sell here because this is where I expect buyers to be trying to buy. So I need to see some more strength going lower. Then I can look for selling opportunities using a hidden channel off the highs tomorrow. All right, looking at the crude chart here right now, where do I start? Where do I start? There's so much to cover here today when it comes to oil. First of all, as I mentioned last week, right, we had that OPEC meeting, and they were kind of getting out of the meeting on Friday, and we heard that announcement that they're going to increase production. right? They're going to increase production. And I told you guys this last week, right? Don't be surprised when they say increase production if it just goes straight up. Again, right? My economics 101 professor right now, he's looking pretty bad right now because how on earth do they increase production? That of course should bring demand down, right? Increase supply. By default, demand should be less, and price should not be going higher because of this. And again, we talked about this right last week on the newsletter. So a little bit of me, right? A little bit of me says that this move higher was nothing more than just getting things into position for the big money in the market to take this sucker going lower here for the rest of the week, right? My gut tells me that this move higher coming out of OPEC is nothing more than a head fake, and that we'll be right back down to that pre-OPEC number probably before the end of the week. But here's the problem. My gut is not a very reliable trading strategy. That's the problem, right? That is the challenge. We don't trade off our gut instincts because our gut instincts are great for survival in the real world. But when it comes to trading, we don't make very good instinctual decisions, right, when it comes to our trading career, right? Trust me, if we could trade off our gut instincts, we'd all be right, successful traders. And the reason why, right, most traders are not successful is because they try to use their gut instincts. So again, my gut tells me this is one big head fake. OPEC says more supply, price goes up, doesn't make any sense. It should eventually come back down. But again, that would be if everything was, 1 plus 1 is 2. The problem is that 1 plus 1 does not always equal 2 when it comes to the business of day trading. So we got to plan a little bit better on this. What do we know right now? Right? Forget what we think. What do we know right now? We know we have a strong move up. And what do we always expect to see when we have a strong move up? A pullback, a two-legged pullback. You're exactly right. Glad to see you're watching the newsletter. And then back to retest the high. So we go back to retest the high, then what happens? Right? Do we see acceptance or do we see rejection? In other words, strong move up, two-legged pullback. Do we see it blast through the high? Right? Are they accepting this market going higher? Right? No, they're not. You can easily see, right? They did what? They rejected the idea of that higher price, right? We don't see accepting, we see rejecting at that high. So strong move up, two-legged pullback, retest the high like a good market should. And then what happens, right? We collapse. And where do we usually collapse to? We usually collapse down to the lowest point between those two highs. Again, if you watch my newsletter, right, this is all repeating myself from last week, right? So here we have now a spike, double top in a bull market. A double top in a bull market tells us what? We have a range, right? Spike and range. And whenever I have a spike and range, strong move up, pull back, double top, pull off the high, right? Rejection. Whenever I have a spike and range pattern, we know now that buyers are going to be trying to buy down below that range. How do they do it? 2-try rule. 1 try, 2 try, failure now going back higher. Okay, so 1 try, 2 try, 1 try, 2 try, and then I want to buy going back up to retest the high. Okay, so it's a spike and range pattern. And I want to buy down below this low. But let's go deeper into this because this is where things get more interesting. The size of this range. Okay, if this was a small range, right? If it's a small range like this, right? If this is the spike and range, then we can aggressively buy 1 try, 2 try back up to retest the high. Why? Because there's no momentum to the downside. It's all bulls. Okay, but if this spike and range looked like this, up, down, up, and then off that high, well now look, that range is a lot wider. Why does that matter? Because the width of ranges, the width of channels, what? By the time we get down to the low of that range, what's happening here? Momentum. Momentum is going to build as the market goes lower. In fact, in most situations, this will now become a bear market. So now I have not a bull market any longer, I have a bear market. And that's what's happening right now on crude. Yes, the long-term trend is bullish, right? And yes, I do believe, right, it's going to want to get back up and retest that high. The problem is the short-term momentum is too strong to the downside. So what I can't do is I can't just take that typical one try, two try failure. Because if I do it that way, it'll go up. Sellers will sell it, and they'll run me out of this, right? This buy, right? So what I have to do is I have to wait for some strength, get this sucker above the moving average, and then I can look to see if we hold that pullback, and I can buy now, going back up to retest that high. Does that make sense? Okay. So again, remember, when you see a strong move into a range, when it's a really narrow range, yeah, no problem, right? One try, two try, buy it, right? Why? Because there's no momentum going lower. But when that range, right, when that range is really large, right? And these happen every once in a while. They're not very common, but when they happen like this, now again, the momentum of the market, not at first, right, but eventually, once they get back to that low, momentum now is just too strong to the downside. I can't be as aggressive being a buyer here. And it also gives the bears the chance I was talking about earlier to run this thing all the way back down to that low. Okay, so I know that was kind of a long-winded answer there, but I wanted to kind of put you in my mindset right now, right? Strong move up, pull back, double top. Now again, we're back down to the low of that range, right? If this was a really small, narrow range, I would say buy it. Buy it right now. But the reality, though, is it's not a small range. You can see the strength, pullback, strength. What do we call that? We call that a 1, 2, 3 reversal, right? That 1, 2, 3 reversal, what does it do? It gives control now for the bears. Okay, so you can see why this is a bit of a challenge here, and you're going to learn a lot tonight because there's a lot of these little nuances tonight that if you're not paying attention, they're going to get you in trouble this week. Okay, so first of all, who has control of the market right now? I think the bears do. I think the bears have shown us too much strength off that high. They clearly sold it here, right? When in all reality, that could have easily held the pullback and gone back to retest the high. So I've got to give these bears control. So why not be a seller, Joe? Why not sell this market? Because look where you are. The last thing you want to do is sell into an area where if I was a buyer, I'd be buying. Make sense? So really, I'm looking for one of two scenarios tomorrow. I'm looking for a scenario that shows me proof going back higher here. I can buy the pullback. Or, right, gladly, like I said earlier, my gut tells me we're headed back to that 66 area, possibly lower, right? Again, how do they increase production, and how can price go higher? That's what I mean, right? So we know the bears have control, but we're a little bit too low to be a seller. Right? Too low to be a seller. Bears have control. How do we first turn bullish? What's the plan to be a buyer tomorrow? Well, you'll notice we've already got the one try, the two try. So now all I need is a strong move up. Now again, in normal ranges, I'd be looking to buy this, right? So if you want to be a little more aggressive, you can look for that letter W, right? And that failure pattern right above that high. If you want to be a little more aggressive, you can look for that buy, right? I can look for that buy off that failure, right? Failure patterns are pretty simple. Strong move down, moving average comes over. We see sellers try to sell that pullback. We know where their stops are, and we buy into their failure, right? That's a seller failure pattern in a bull market. Now, that is, in most cases, what you're going to use in this environment. Okay, but again, because of the width of this range, what I want to see is I want to wait for it to pull back now, and I want to see it actually, right? I want to see it actually go because I don't trust it going higher here. But if I can see that strength going higher, in other words, I'll gladly skip the first opportunity to take a much more reliable pullback pattern right off that low. So as of right now, we've got one try, two try, looking for a failure if you want to be more aggressive, right? Again, not really my cup of tea on this one. I'm going to look for that strength going higher, then I'll wait for that pullback because that's what I can control, right? I can control waiting for price to give me proof. If I try to buy it here, I can't control how that market reacts. And because the market is bearish right now, I need to see some more proof. All right. I know it's not as exciting, but I need to see enough proof to give me the odds on my side. Okay. Now, real quick, I've covered a lot so far. We've talked about 1, 2, 3 reversals, spike and range pattern, the width of the range, right? The OPEC meeting, failures, 2 try rules. We've talked about a lot so far in just this first chart. So here's what I want to do. If you're here for the first time today, I want to give you a deeper dive into everything I'm talking about here right now. I want to give you guys a free trading course. In the upper right-hand corner, you'll see a link there pop up right now for that free trading course. Pause the video, grab that free class, make sure you get registered. I'm going to send you an email, so make sure you confirm your email. And in that email, I'm going to send you a video, actually a series of videos that will teach you all about this trading strategy. All right, guys? Trading is a complex business. It's a complex topic. I can't go over everything in this short period of time we have here today. So to make sure you get the most out of this newsletter, so you know the terminology, you know the patterns I'm looking for, grab that free class in the upper right-hand corner. Trust me, you will not be disappointed. So that's if price goes lower, right? Strength move up, pull back to that moving average. Perfect. We'll look for that move going back up, right, to retest that high. Now, remember, if we can get back to retest that high, this is major resistance up here, right? Major resistance. So what I have to do is we either up to that high, then we're either one of 2 scenarios. Either we pull back and we look for the buy off the low again, right? Same scenario, buy off the low, or we see it go through the high and we look for buying opportunities off the moving average on that pullback. Usually what it'll look like is it'll be something like this, right? It'll be a new bull channel, and we'll look for those buys around the low of that channel and again around the moving average. Okay, but again, get it through that high. That's the key here. We've got to get it through that high to make sure, right, that we have that strength going higher, right? Remember, we saw them reject the highs here. How do we, right? We got to make sure we protect ourselves. Do they reject here again, go back down and buy the low? Okay, or we go back up to the high, we go through the high, find that new channel, right, and then buy the low of that channel as we go higher. All right, again, does it make much sense why it's going higher right now? But like I said earlier, that's not my job. My job is not to make sense of the world. My job is to figure out the direction of the market. It's bullish, find support, and then find entry patterns, right, at that level of support. Now, what about the bear side here? How do we turn bearish? The bear side's actually pretty easy. First of all, as the sellers take control, the objective is quite obvious. It'll be back to where this party began on Friday morning. That will be the short-term, relatively easy objective for those sellers. From there, then obviously we try to go down to that 64, right, 23, 63, 40 area, right? These will be milestones that maybe later in the week we'll get to, right? But obviously that's a pipe dream right now. So looking at the chart right now, how do we turn bearish? How do we feel safe selling this market? Well, like I said, I think the market's already bearish right now. So really all I have to do is get away from this area, right? Show me some more proof going through. What I'm ultimately looking for is we have strength, pullback, strength. I want to see it go lower. If I can get it going lower, I can draw that new channel, I can find a new channel, and I can sell off that channel high, right? And that will be my goal tomorrow morning. So if we see these sellers take this market lower, right, whether it be going up and then back down again, again, I wouldn't be surprised if we see some sellers up here with a little trap up here, right? Even if we do go up and then back down, find that new channel, right, and then sell off that channel high. Okay, if we just roll over and play dead, going lower, perfect. Find that new channel, right, and then sell off that channel high. So it's a relatively easy plan if we can get that next leg lower. Again, I think right now, though, even though the bears have control, I think the buyers will likely send this price or at least give it a very good try to send the sucker back up to retest that high. And again, you know my plan on how to buy going back up to retest that high. Let's keep going. Don't forget, 8 o'clock tomorrow, we'll be executing this strategy with all of our clients tomorrow morning. I look forward to seeing you there with me. How about some S&P? The S&P is bearish and trading at the high of a spike in range, just above the prior month close. The sellers have control of this market right now. And this prior month level is quite convincing to avoid selling into it as support. So we're too low to sell right now, and we're too bearish to buy. So the plan is to wait. If we see a 1, 2, 3 reversal, then I'm looking for a hidden channel for buying opportunities going right back where we came from. If this recent pullback fails, however, though, price is too low to sell. So my focus will be traps up above the range highs tomorrow morning. Boy, another example here today of a challenging market, right? First of all, this whole entire move down was all based on rumors, right? That the kind of tit-for-tat tariffs between the U.S. and China was going to kind of balloon into restrictions on foreign investment, allowing U.S. firms to invest in Chinese companies, allowing Chinese firms, to invest in U.S. companies, right? Makes sense? And, everyone's, at this point, it's very adolescent the way this is all going about it, but hey, that's the way the world works right now, right? The world we live in right now is nothing more than high school, right? Glorified high school shenanigans, right? Welcome to the world we live in, right? May not be fun to watch, right? But I guess it's entertaining if you have a sense of humor about it. I guess we'll say that. So the bottom line is, whatever your opinion about the whole, crap going on right now is this whole move down was nothing more than the rumor, right, that the U.S. in the China, restrictions of foreign investment. Okay, we've had numerous attempts from the White House, the Fed, all the panel that have said this is not what we said, right? So it's been pretty quickly debunked here. So again, my gut tells me we're going back to retest that high tomorrow. Okay, that's my gut. My gut tells me this is all based on rumor. We just heard, in fact, you can see the rally higher here. That rally higher is basically, the news headlines reading where nobody said, restrictions on investment, right? So people jumped way ahead of things, price collapsed. Again, my gut tells me we're going right back up to retest these highs, from late last week, up around that 27,700. The problem, though, is I can't trust my gut. Right now, the momentum is way too strong going lower. Momentum is way too strong going lower. And really the big problem is you can see where we are right now. Look where we are. We're right at that prior month close. Now this is important, because we're going into the end of the month. And as we get closer to the end of the month, what do we start seeing? Those prior month open, high, low, and close levels. So this further complicates the situation. This makes me think that sellers really had nothing they were trying to accomplish but just go back to last month's close. They got it, and now we have to wonder, are they going to keep trying to retest that low? The problem is we now have a rising support trend line, and again, that prior month close is clearly what they were going for. It wasn't the big round number because, look, they didn't get it. That prior month close is definitely what they were hunting for. So if I'm trying to sell right now, I'm selling right into that prior month close. In other words, it's too low to sell. We're running right into support. But it's suicide here trying to buy this market right now. It's too bearish. Again, I could just go with my gut instinct right now. But I'll tell you right now, if I went with my gut instinct every time I took a trade, I wouldn't be here right now. I'll tell you that much. I've been working some 9-to-5 job, doing something else. Because you can't survive on gut instincts alone. You have to give yourself the odds in your favor. So right now, trying to sell this market using a two-try failure is not going to work. I'm right into that prior month close. I've got that rising support trend on the way as well. So what I'd rather do is I'd rather be a buyer. But the problem is, again, we're not bullish. So how do we turn bullish? A 1, 2, 3 reversal. I call it the 1, 2, 3 reversal. And basically, it says strength, pullback, strength. In other words, a strong move against the trend, in this case, a bullish move against that bear trend, a pullback to the moving average, that's 1, that's 2, and 3 would be another strong move higher. If I can get that strong move higher, then I can draw my new channel, I can find my new bull channel, and I can buy off the low of that channel. Okay, and usually what happens is we usually wind up getting the moving average going higher here, and usually that pullback will usually be a failure pattern. That failure pattern will then lead to strength. That strength, right, will lead to a pullback, right, and that pullback will lead to that move going up again to that 2770 area where this whole thing began. Okay, so again, as we go higher, I'm looking for a hidden channel. That hidden channel is drawn off the highs in that situation because that's all you have to work with. We bring it down to the low. We try to buy the low of that hidden channel. Most of the time, hidden channels, they're going to look a lot like this. They're going to get just up on the opposite side of that moving average. And just like this pattern went up, down, like letter M, right? Letter M on a chart. In a bull market, it'll go down, up, right? Letter W. Down, up, right? Letter W. That's a failure pattern. Okay, in a bull market, a seller failure below the moving average at the low of a bull channel, perfect buying opportunity, right? Now, that seller failure often leads to strength. I don't chase the market higher. I wait for price to pull back to a pullback pattern, right? Pulling back to the moving average, and then we get that run up to finish this move back up to retest the high, right? So again, 1, 2, 3 reversal, 1, 2, 3 reversal into a hidden channel for buying opportunities, failure, strength, pullback, back up to retest that high. And again, if you want to learn more about the 1, 2, 3 reversal, hidden channels, failures, pullbacks, strength patterns, make sure you grab that free trading course. You'll see that information icon in the upper right hand corner. Follow that link, right, and come join me in that free trading course. Now, what about being a seller right now? There are ultimately two scenarios I'm looking for right now to be a seller. I'll tell you, I don't think we're going to get much to it, but again, you should not trust your instincts, and neither will I right now, right? My instinct tells me this thing's not going to last much longer and we go back higher again. But again, do not take my word on that. Make the price action prove it to you. Right now, the bears have it. So if we run lower now, what can I do down here? I don't want to sell into this prior month support. So what I'm looking for is if we run lower, I'm looking now for traps so I can sell up around this high. Right? So we run lower here now. I'm looking for a trap pattern so I can sell right up around that high. I don't want to sell low. I don't want to sell into it. Okay? I want to see it go lower, but I can't sell there. I want to sell up. That way I'm not selling into that prior month close. The only other option, right? The only other option is if we can see this thing go lower and actually get through, right, this darn range, right? Then I can look for selling opportunities below that range low. But as of right now, we're going to see a lot more strength. Good example. You'll notice back here, we went a nice big strong move down, right? Pull back to the moving average, failed. That's what likely will happen, right? We go down, we try, we fail, and back up again, right? So what you want to see is you want to make sure you get enough strength below that range. How strong? Strong enough to get that moving average down below that 0.3 3/4. Right? You'll notice they didn't get the moving average below the range low before and it failed. Okay? Don't let that happen again. Wait for the strong move, and then we'll use what was support, right? We'll use that as resistance as we go lower. Now, where would the next leg lower be for the S&P? If I look left, right, I can see we have a couple milestones here. One would be a prior swing all the way back. Well, look at the end of May. Again, end of the month, watch those prior month levels, right? 26.78. And then if we go even further, we get the prior month open all the way down at 26.52 3/4. So we definitely have some potential run here, right? This market could just be getting started here this week to the downside. Okay, but again, as of right now, though, this whole move lower was all based on rumors that we know are not true, and eventually this market will likely figure that out and give us that short covering rally. We got a plan for that. The hard part, really, in my opinion, is if we don't reverse, right? Do we tumble back in? If we tumble back in, I'm looking for sells up above that high, right? Do we tumble back through? Can I get that moving average down below that low? Is that an option? Right? Is that an option for tomorrow, right? Those are the things I'm looking for to the bear side tomorrow. All right, guys, careful, careful, careful. This could be a really rocky first few hours, right, tomorrow morning. Here's some Nasdaq now. Nasdaq is in a very similar position. Okay, now here on the Nasdaq is bearish and bouncing off the prior month close, right, with, of course, a short covering rally. It's certainly tempting to buy this market for a possible move back to where this bloodbath started this morning, but with the overall momentum being so strong to the sell side today, I got to wait for more proof, right? I can't be buying this market just because I think it will go higher. I need to wait for proof that it is going higher. So knowing this, my plan for tomorrow is to look for buying opportunities, right, only after we see that 1, 2, 3 reversal. Okay, get a big target all the way back up around that 72.20 area. Right. At the same time, my plan, though, for now is to look for a buyer failure at the moving average for a short back down to retest that low. Now, one thing is very different about these two charts. There are some similarities, and there definitely are some significant differences. What I want to point out first, right, is a very unique situation that we see quite often. And I want you to notice this quickly here. Notice how the prior month close, right, that prior month level is right at the low of day. It's right around that low. Now, the reason why I point this out is because in a bear market, a strong move down, we expect to see a retest of that low. So the only thing standing in their way right now is this rising support trend line. Okay, now think about this for a second, right? The prior month close, that level of support, is basically right at the low of day. So sellers don't have to worry about selling through very much here, do they? Now go back to the S&P. The S&P is in a very different ballpark because you can see now the S&P wants to go back and retest its low, but look, it's got to go through that prior month close. Is that making sense, right? See, the sellers on the S&P, they can't sell here very easily, right? I call this a scenario where we're boxed in, right? I call this being boxed in. In other words, the sellers are going, I can't sell here. I get support in my way. And if the sellers can't sell, what's going to happen? By default, they become buyers. And the price will oftentimes result in a reversal because of being boxed in. Right? They just simply don't have the open space they need to be confident. And so what do? They wait for price to go higher so they can sell it again. But now if they fail, right, now we got that hidden channel, and now it's just ripe for a buy. See, situations like this where the low of day is significantly below that major support, these lead to sellers going, I'm not touching this, and the price reverses. Again, hasn't reversed yet. But that's why I said my gut tells me we're going higher. Look at the Nasdaq. Same situation, right? Strong move down the Nasdaq here. What do? They pull back, they retest the low, they bounce off that low. This is a spike and range pattern. Okay, it's a strong move down, right? It's technically a two-legged pullback, I guess, right? And a retest of that low. Do we go through the low for acceptance? No, we get rejected. And again, we see this short covering rally. Sellers who are short get out, right? Short covering rally, right? They become buyers. It's all happening now at the end of the day as we're seeing more headlines saying, no, what you guys freaked out about earlier this morning is not the case. Okay, so will that result in this short covering rally turning bullish? Or will this market sink back down to retest that low? There's a whole lot more potential for this Nasdaq to go lower than there was for the S&P. And I hope you can see why I say that, right? Leave me some comments in the comment section on YouTube if you want more clarification on that. All right, so we already know the plan here, right? If we do get the 1, 2, 3 reversal, again, if we see one more long leg here, we get one more strong leg going higher, right? If we see again, it's called a 1, 2, 3 reversal, strength, pullback, strength. If we see a 1, 2, 3, right, strong move up, then what do? Yeah, find that new channel. It's going to happen quickly, so get at it quickly, and I want to buy that low, right? I want to buy that low, and again, the objective is going to be up to retest that high. You know, again, once the market realizes they made all this stink about nothing, right, we could easily see the sellers take their profit, buyers start racing higher, right, and we look for that right? Short covering rally going higher here tomorrow. Okay, now the bears have control though. The momentum is bearish. What's the plan for that now? Well, how about this? We go lower, right, on strength, but I don't want to sell down here. What do I do now? Right? What do I do? Well, here's a couple options. Okay, you'll notice we haven't pulled back to the moving average yet. Okay, so here's the best option for us. If that can use this trend line, let's zoom in a little bit closer here. Okay, this trend line can be used for a selling opportunity on the opposite side, like this. Okay, so that, right, that trend line can be used as a selling opportunity on the opposite side. Okay, so here's what I'm looking for. I want to see the pullback to the moving average. Okay, when we pull back to the moving average, I'm expecting that buyers trading off instinct are going to try to buy that pullback. This will now give you two opportunities. One is going to be the, hold on here real quick. There you go. You know, you can probably finish my sentence right now, right? One will be a trap or a two-legged pullback, right? Two will be a buyer failure, right? Two-try rule. Three will now be a pullback. Now remember the pullback in this case. Okay, the pullback has to be up around the high of that range. Okay, do not try to get lucky and sell into that level of support. I know maybe it's successful, maybe it's not. That's the problem. We need to do better than that. Okay, so there are three opportunities, but what do they all require? They all require us to pull back to the moving average. Okay, they all require us to pull back to the moving average. Okay, so if we end up running higher here with a pullback, it's bullish. Okay, but again, pull back to the moving average. And why the moving average? Because the moving average is where you're going to see the people get in and get out. Okay, it's where you're going to see the rubber hit the road. So again, let's get the moving average tested. Pull back, try it, failure, strength, pull back, right, and back down we go, right, back down to that low. Again, staying below the trend line, getting below the moving average, right, into a failure. All right, but again, first, we're waiting on one thing. We're waiting on more information. We're waiting on, do we pull back to that moving average? We're waiting on, do we just rush higher? If we rush higher, we know the plan. Remember, if we do end up failure, strength, pull back down again, what happens down here? Remember, this is support, right? Do we continue with a breakout pullback pattern lower, using that level of support now as resistance? Or do we bounce like it did back here, right? Do we go all the way back down to that low and bounce? If we bounce again, what are we looking for? Either a 1, 2, 3 reversal into a new channel, or, right, a 1, 2, 3 failure back down again. So sell the high of that range until what? Until that 1, 2, 3 strength reversal, then find that new channel, and we're off the rates of the upside. Again, I think a lot of people now are probably going to try to buy this thing, okay? But I think it's too early. A lot of times what happens is you think you've got the market beat, you buy it, you go, oh yeah, this has gone way too far. But what happens? It just kind of crumbles back down again. Momentum is too strong. Don't fight the momentum of the market. If the momentum wants to go higher, show me proof. Show me proof first. Then we can look at being a buyer. All right, let's keep going. Some more challenging, maybe not as challenging here, but gold. I'll tell you, man, gold, something's up with gold right now. Gold is range bound, and it's nasty this evening as price action sits the low of today's triangle pattern. Even with such lifeless price action, though, the triangle still gives us opportunities. Failure patterns, two-try rule, buying low, selling high, and avoiding the middle tomorrow. Now, you can tell something's coming out there because gold is all wound up tight right now. Low volume, small ranges. Remember, guys, what happens in these markets is that you go from expansion to contraction, right? We had the markets earlier this year. I'm not sure if you guys were here earlier this year, but earlier this year we had really wide ranges. Well, now we're starting to get narrower here, and that won't last forever, right? It'll widen back out here again. So if you're on gold, right, we were January, February, March, right, and now April, May, June, right? We're starting to get really narrow here right now on the gold. Again, it's a little bit nasty out there right now on gold, and it's easy to tell that something's coming, but we want to make sure we want to participate in this market. I'm not going to just not trade it. So here's the plan for gold tomorrow. We're going to keep our eyes open. We're staying patient right now because this market definitely is, again, really slow, really sluggish right now. So we got a trend line come off the low, a trend line coming down off the high, right? And you'll notice here that is what? Yep, lower highs, higher lows. It's a triangle. And what do we know about triangles? If you watched my lesson last week on triangles on my YouTube channel, and again, you can learn more about triangles by taking that free trading course in the upper right-hand corner. When it comes to triangles, we stay away from the middle and we focus on the edges. You'll notice I'm marking up, right? I'm marking up those edges here right now on this triangle, right? The edges of this triangle. What I want is, whenever I have a triangle pattern, I want to stay away from the middle. Okay, stay away from that middle. You'll notice I take the kind of the vertex of this triangle. I draw a horizontal line here, and ultimately that horizontal line, we go up, back down to that line, right? We go down, back up to that line. So to do that, I want to use what I call the 2-try rule. Okay, the 2-try rule is pretty simple. I want to see us go up, that's 1 try. Pull back, up, second try. Once I see that second try, I then look for a sell going back down. Right now, this can happen in both big and small, right, kind of versions of this. For example, we go up 1 try, pull back to the moving average, second try, failure back down. A little bit larger example, 1 try, 2 try, failure back down. Right? These happen in major, minor, and micro examples. So what I always do is I always drill down to a faster time frame, like an 800 to a 1,000 tick chart, and find those entry patterns on a faster time frame. So again, I want us to go up 1 try, 2 try, failure, back down to that range. Again, the target is back at the middle of that range. Then we'll go down, right? 1 try, 2 try, going back up in. Okay, so as we go higher, 1 try, pull back to the moving average, second try off the moving average, right? Second try starts to fail, we sell it back down, right? We go lower, 1 try, moving average comes over, bears, they try to sell at that moving average, they fail, we go back up in. Now, eventually, this market will break out of this range. What does a breakout look like? 1, 2, 3 breakout, right? 1, 2, 3 breakout. Okay? It's just like a 1, 2, 3 reversal. Strong move up, pull back to the moving average, strong move off the moving average, 1, 2, 3 reversal. 1, 2, 3, in this case, breakout. Find that new channel, right? Find that buy off the low of that channel, right? Same thing we talked about earlier. And that goes for both directions. 1, 2, 3 breakout, right? New channel, sell off the high of that channel. Right now, though, we're a range-bound market. And while we're a range-bound market, we fade those edges. We buy low, we sell high, and we use that 2-try rule. We focus on failure patterns. Buying as the price goes lower, selling as the price goes higher, using our specific 2-try rule entry pattern. And again, you'll learn a lot more about that 2-try rule on our free trading course. Wrapping up here tonight on the euro, and boy, I can tell we're already running pretty late here tonight. I got a late start this afternoon, and I'm running late on this video too, so I really appreciate you sticking around here with me tonight. Euro is bullish with a trading range and a spike in channel pattern this evening. And with the buyers showing a strong 1, 2, 3 breakout above the range highs, I can safely assume these buyers have control, and now I just need to wait for a pullback to a support level for buying opportunities tomorrow morning. As you can see here, as we came out of last week's session, right, strong move up, pull back, double top. What does double top tell us in a bull market? It tells us we have a trading range. Every time the price goes lower, 1 try, 2 try, back up. 1 try, 2 try, back up. 1 try, 2 try, back up. These are 3 good examples. Again, this is coming from last Thursday, right? These are 3 good examples here right now of buying the low of a range, buying the low of the range, buying the low of the range, using that. Again, they're never going to be exactly perfect, right? But that down, up, right? That 2-try rule. 1 try, 2 try. It looks a letter W. Okay, and again, learn more about letter W, the failure patterns, by grabbing that free course in the upper right-hand corner. Okay, so we just talked about this on gold. How do we break out of a range? We have to see what? Strength, continued strength, not just a strong move. Because look what happened back here. That was a really strong move back here, and what happened? Did that automatically break out? No. That strong move down failed and went right back up in again. Okay, so strong moves are not proof enough. It's got to be a strong move and then hold that pullback and keep going. Right? Now we're talking. So now we know we have that successful breakout. Now I'm bullish. I want to be a buyer, and I don't want to buy at resistance. I want to buy where? At support. Where's my support level? I'm glad you asked. Let's take these highs. Let's bring them down to that low. And it's a channel that only a mother could love. I'll be very honest, right? It's not the prettiest of all the channels out there, but I'm sure somebody out there will love on it, right? I love this channel because now that's where I'm looking for my buying opportunities from off that low. Now, talk this thing through here with me. If we pull back to the low of that channel, what's going to happen? We're going to look like this again. We're going to be down below that moving average again. And what's happened every time we've gone below the moving average? You got it. What? Sellers try and they fail. Failure leads to strength. Strength leads to pullbacks, right? And pullbacks up to retest that high, right? So seller failure, bullish strength, bullish pullback, going back higher. I want to buy at support, guys. I don't want to buy at resistance. I know we're moving higher here, but remember, we can't just trust our instincts because our instincts tell us to buy as price is going higher, right? If you buy every time price goes higher, you can be broke in a few days, right? You might get lucky every once in a while, but it's difficult to get lucky every day in the markets. It's like getting lucky in roulette every time you throw the dice in Vegas. You might get lucky every once in a while, but you better walk away from that table, right? You're not going to get lucky every day, especially not with a lot of large numbers on your side. So that's the plan, right? Pull back, right? Pull back. Now, what if price keeps going higher here, right? What if it keeps going higher? What if we keep going higher, then what? Well, then I'm going to find a new channel. If we keep going higher, find a new channel, and let's buy the low of that channel. Make sense, right? If we keep going higher, target, measured move, keep going higher, buy the low of the new channel. Okay? I'm shameless like that. I will throw this current channel in the trash can and use a new one the minute I know I have to. Okay? And if we're pushing through the high of the channel, find a new channel. Okay? Trust me, it'll be worth it. Okay? Buy off the low. Now, there's also potential here we might collapse. There's always potential for that, right? You know, hey, for all I know, this could be nothing more than a big attempt at two try, and we could fail back down to that low. What's the plan? One try, two try, failure, strength, pullback, back up from there. Okay, so if we do end up back at the low of that range, I'm looking for a seller failure to buy it as we go back higher here, right? Or they run it lower, 1, 2, 3, reversal, and we sell the high of that channel, right? You see how this whole thing we've talked about so far, it all comes together, right? It's a bull market. How do we turn bearish? 1, 2, 3, reversal, right? It's a bull market. Don't buy at support. So don't buy at resistance, buy at support. But what if it keeps going higher here, Joe? Well, let's find some support then we can use. Find that new channel, buy again at support. Okay, don't forget, if we make our run up to that measured move, we most oftentimes two-legged pullback and we'll do it again. So if for some reason you can't participate in this on the way up to that measured move, two-legged pullback, right, and then do it again. All right, guys, really, really good charts tonight. I know I'm running late. I thank you so much for your time tonight. I just wanted to make sure I got a lot of those lessons out of the way here this evening because, again, on the crude and on the E-minis, your gut is going to tell you one thing, but you've got to remember what momentum says first. Momentum is bearish, right? It's bearish on oil and the E-minis, so we have to wait for it, right, to take control back to the bull set before we go buy in that market. What's tomorrow going to bring? Will we get that short covering rally on the E-minis? Will we get that collapse on crude? Only time will tell. And I know one thing's for sure, though. Tomorrow morning, I'll be in my trade room with all of our advanced members, and we're going to trade whatever the market throws at us, because we have a strategy for pretty much everything: up, down, sideways. And again, I hope you guys learn a lot about that stuff tonight in our nightly newsletter. Don't forget, any questions, hit me up on live support. Drop me a comment in the comment section on YouTube. Learn more about our beginner, intermediate, and advanced classes, right? And let's get at it tomorrow. I will see you guys bright and early, 8 o'clock Eastern time. If I don't see you guys tomorrow morning, right, be well out there, be nice to each other, and I'll see you same time, right, same place tomorrow evening, guys. My name is Joseph. We'll see you guys next time. Adios, amigos. Bye-bye for now.